What is going on, everyone, and welcome back to Explain the Charts. Today is October 20th, 2025, and we are taking a deep dive into the Nasdaq 100 ETF, ticker symbol QQQ. We've just come off a period of incredible highs followed by some sharp volatility, so there is a lot to unpack. First, we'll cover the major news events creating a very mixed sentiment in the market, and then we'll jump into the charts to see what the price action is telling us. Looking at the current headlines, we're seeing a classic battle between bullish and bearish narratives. On one hand, there's continued optimism fueled by the AI boom, with JP Morgan noting that the top 30 AI companies now make up a staggering 44% of the S&P 500's value. Strong bank earnings and persistent hopes for Federal Reserve rate cuts have also provided significant tailwinds for the market recently. We've even seen record inflows into global crypto ETFs, suggesting a strong risk-on appetite among some investors. However, the bearish arguments are growing louder and can't be ignored. The ongoing U.S. government shutdown is a major source of uncertainty, as it's delaying the release of crucial economic data that the Fed and investors rely on. This uncertainty is a key reason why we've seen safe haven assets like gold surge to record highs above $4,000 an ounce. Wall Street is also sounding bubble alarms around the AI rally, drawing parallels to the dot-com era. We're seeing signs of specific weakness in tech, with Oracle shares recently dropping on concerns over its cloud profit margins. Additionally, data showing soaring auto loan delinquencies points to growing strain on the consumer, which is a foundational risk for the economy. These conflicting forces are creating a tense environment, where the market is rallying on hype but is underpinned by significant fundamental risks. Now, let's see how this narrative is playing out on the QQQ daily chart. As you can see, we've been in a powerful, long-term uptrend since the middle of 2024, moving from the 460s all the way to a new all-time high just recently. The price topped out around the $613 mark on October 9th before facing a very sharp rejection. This entire uptrend has been punctuated by periods of sharp, but relatively brief, pullbacks, such as the one we saw in early August 2024 and a very significant drop in early April 2025. That April drop took us from around 480 all the way down to nearly 400 before the rally resumed with incredible force. The key takeaway here is that while the long-term trend is undeniably bullish, the market is prone to sudden and deep corrections. The recent price action is what's most critical for us right now. We established a new all-time high at 613, which now stands as the most important resistance level to watch. The immediate aftermath was a swift two-day drop of over 3.5%, finding initial support right around the 589 level. This 589 level is now our immediate line in the sand for short-term support. Looking back, we can identify a prior resistance zone from the August 2025 highs, roughly between 575 and 580. In technical analysis, old resistance often becomes new support, so this 575 to 580 area is a much stronger and more significant support zone to watch if the 589 level fails to hold. Let's zoom in on this recent volatility by switching to the 1-hour chart, focusing on the action from the start of October. Here we can see the final push to that 613 high, which was followed by an aggressive, high-volume sell-off on October 10th. That massive red candle shows a clear and decisive rejection at the highs. The high volume accompanying this drop suggests institutional profit-taking, possibly triggered by the growing fears about a government shutdown and the AI bubble we discussed earlier. Since that major drop, the price has been attempting to stabilize. We've seen it bounce off the 589 to 590 area and enter a period of consolidation. The price has since recovered to around the 604 level, but has struggled to gain further traction. This price action is forming a short-term range between roughly 590 on the low end and 605 on the high end. The market is essentially coiling in this range, waiting for its next catalyst. Now, for an even closer look, let's switch to the 15-minute chart to analyze the trading days from October 15th through the 17th. This view really highlights the choppy, range-bound nature of the market following the big drop. We can see multiple tests of resistance in the 604 to 605 zone, with each attempt being sold off. Likewise, we see buyers stepping in to defend the 596 to 598 area on any intraday dips. The market seems to be building a base here, but the lack of a strong follow-through rally shows that sellers are still active and buyers are cautious. This tight consolidation on the lower time frames confirms the indecision we see on the hourly chart. Traders are closely watching this range for a breakout. A move above 605 would signal short-term bullish strength, while a break below 596 could lead to a retest of the major 589 support level. So, let's recap the key levels and potential scenarios. The major, long-term resistance is the all-time high around 613. Immediate short-term resistance is the top of the current consolidation range, around 605. On the downside, our immediate support is the low of the recent plunge, around 589. A much more significant, structural support level lies at the August highs, between 575 and 580. So, what are the likely paths from here? Let's outline three possibilities. First, the bullish scenario. If QQQ can decisively break and hold above the 605 resistance level, I would assign a 60% probability that we see a retest of the 613 all-time high. This would likely be fueled by positive earnings from big tech or a favorable resolution to the government shutdown. Second, the bearish scenario. If we break below the crucial 589 support level, I see a 70% probability of a further decline to test the stronger support zone at 575 to 580. Negative geopolitical news or weak economic data could easily trigger this move. Third, the neutral scenario. The market could continue to chop sideways between 590 and 605 for the next week or two as it waits for more clarity. Given the current uncertainty, I'd place this at a 50% probability in the immediate short term. Keep a close eye on upcoming big tech earnings reports and any news related to the Fed or the government shutdown, as these will be the primary catalysts. That's our in-depth look at QQQ. Remember, this is not financial advice. This analysis is for educational and informational purposes only, and you should always do your own research before making any investment decisions.